So yes, welcome to this episode today. Today we're going to be discussing the analysis of Solana. Realize that if you find that you're a trader that's actually suffering, or you find that you're struggling to make analysis when it comes to crypto, I think this episode is actually based for you. So today we're not going to tackle a very deep depth of Solana. So what we're going to be tackling is I can show you the way my own strategy of trading Solana or of making any form of analysis for technical analysis. I'm going to show you technical analysis today. I chose Solana because it's one of the decentralized and it's actually good. So you can make a lot of profits. You can make 100x profits. You can make a lot of profits. It only needs you to have a form of strategy. So the strategy that I'm going to be using with you today, it's going to be a one that you can swing with, where you can hold trades for maybe a week or two, or you can hold trades for 3 days to 4 days. Okay, so if you know that you're a swing trader, then where you can actually hold positions, and I think that this episode is going to be for you. So I'm going to show you. So if you feel like this is going to work for you, because it literally works for me a lot, it works for me a lot. So yeah, so I'm going to use this trading view today. So because I feel like it's best because it has a lot of tools that we can use so that you can be able to see where I'm able to acknowledge the entries, where I'm able to see where institutions are actually showing us some form of liquidity, where we can be able to identify institution manipulation. So we are able to see those things properly. So yeah, today it's going to be about Solana. So if you're not trading Solana, it's okay, but like you can just learn from the strategy. So I think we can just try a 4-hour time frame where it's a little more bigger though, hey? But a 4-hour time frame, it's going to be much bigger. So we can try a 4-hour time frame and see how institutions take liquidity from us and how they become profitable. So yeah, because a 1-hour time frame shows us daily contracts of institutions, so we can actually see what happens on Monday's contract, Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday. So we are able to identify what institutions were actually doing throughout the entire week. So with a 4-hour time frame, looking at the 4-hour time frame, it means that every separator, it's a week. So for every separator, it's a week. For every separated contract, it's a week. So let's just try and check and see if it'll be good for us to use it. So I just want to try and see something, because based looking at it, I don't think the 4-hour time frame will be that good for us to, because it's not that, clear. It's not that clear. So you won't understand what I literally want to show you, and you won't be able to see the strategy properly here. So it's gonna be something else, but hopefully maybe we can try. Yeah, maybe we might try it. Let me see. Let's see if we can actually do something here. Let's see. So, but a 1-hour time frame was good because you can actually zoom nicely. We are able to see things properly, either than using this 4-hour time frame. It's, it doesn't show you the details that I literally want you to see, but I think it's good. We're gonna use the 4-hour time frame for, yeah. So I think we're gonna use just only 2 intro weeks. I think if we can use 2 intro weeks, it will be very good, so that you guys can understand how we make analysis. So we can see that on Friday, yeah, today we can see that today, which is Friday, so we're gonna look for Monday, which Monday was actually on the 17th. So it's gonna be like, I think, 3 intra-weeks. So let me start first by separating the weekly contract. So um, by separating the weekly contract, it makes this much more easier. So we're gonna look for Mondays, because Mondays, they give us all the pivot points that we might need. So I decided to make this chart analysis for you guys so that you can actually see, because usually on the content that we usually release, it's usually theoretical. So I think maybe if we can just try to implement some practical content for you, it will be much more realistic, because you will understand what we're literally trying to say. So remember, us showing you this type of analysis, it helps you a lot. So let's say during the week, an opportunity can only present itself maybe during Friday, or maybe Sunday, or maybe the following week. So you don't just go into the markets. You just always have to wait for signals. Um, you know, you need to wait for proper setups to show up. So that you shouldn't be careless, or you shouldn't miss good opportunities. So in this sense, it's good. So we will check. Yes, perfect. So now I'm going to highlight the highs and lows of every weekly contract, so that we can be able to identify things clearly. So we can see that the first intra week, we have our low. So yes, we have our low. So I'm going to show you how we do this. We have our low here, and yes, we locked it, and we also gonna have our high. Where's our high? Wait. Uh, yes. So somewhere here. Exactly. So we have our high. So I can actually make it to exceed even further, so that you can actually identify why it did what it's supposed to do. So it's very important for us to take all this into consideration. Okay, so now you can actually see that on the first intra week, so we're talking from the 24th of February until the 2nd of March. So what I'm gonna do is I'm gonna do this. I'm gonna stay first intra week. Okay, intra week, first intra week. So let me just make it a little more bigger so you guys can see. Let's check. Okay, 18, yeah, or 20. I think 20 will be much better. So yes, we can actually see that 20 intra week. So in this sense, it's much more realistic. So you can actually see that the first intra week, this is our first intra week. So we're also gonna actually see opportunities that were actually presenting themselves throughout the entire intra week. So now we're going to highlight our second. So still, our high is still in the very same area. So the high is still the high. So it's still a continuation of that high. It's the very same price. So it's not taken out yet. So we still have that pending order of institution. So it's fine. Now we're still going to mark. Let me just change the color of this one so that it can make sense. Let me get a lighter color. Yes. So I think when it's like this, it'll make a little bit of sense. So we're going to highlight our low. So where's our low? Yes. So our low was actually the very same area as the previous week. So this is actually good, So this is our second intra week. Guys, I'm telling you, if you have an edge of knowing when to enter the markets, enter the market and not when to enter the market, it gives you an advantage. So you become profitable easy. You make money very easily in the markets because you are able to identify things much more easier. Because when things are a bit complicated, it's a problem. So like this, you can actually save yourself time compression. You can be able to prioritize when to enter the markets or not. So you see here, it shows that we have, let's say, four. It means that we have four intro weeks, I would literally say. Because here on the third intro week, remember that the markets doesn't move the way you want them to. It's literally based on price action and also institutional liquidity. So institutions, they place orders where they want the market to take place. So remember, what I'm going to show you, it's very amazing, guys. So if you know that you're a swing trader, this is going to be very good for you. It's going to be a very, very amazing video for you because it's going to help you hardcore. So now, before we reach this fourth intro week, I wouldn't literally call it a fourth intro week because like we're still in the process of that week, So and then opportunity literally presented itself yesterday. No, on Wednesday, 19 Wednesday on Wednesday 19. So here I'm just gonna say from 12th, what is the date? From 24th Feb to 2nd March. 24th Feb to March. Okay, this is very good. So I can do this so that you can understand what's happening. So in this sense, it's good because now you know that this week, this intro week, it talks about from the 24th of February until the 2nd of March. So now you know what happened from the 24th of February until the 2nd of March. So now you're able to identify exactly what literally happened and what institutions that. So guys, it's important that you need to look at this contract. This contract took all these days for it to be completed. So now we're going to the second intro week. So we want to see when it opened. So the second intro week. So it started on the 3rd of March until the 9th of March. So we're just going to say, yes, the 3rd of March. 3rd March to 9 March. Yes. So these things will help you. You will be very successful, I'm telling you. I don't know if you feel like you want to use this strategy, but I'm telling you, it's very good. And if you like, you can also put your volume indicator if you want to. You can add your volume indicator. It can literally help you though, so you're able to see very strong demand and support, demand and support zones. So it helps you to be able to identify those things. So we are even able to identify order blocks. So we're able to identify imbalances. If you feel like there's also imbalances that we must also identify also, because I feel like they help a lot. So there are also imbalances to check for. Not literally bad, but I'm only putting this imbalances so that you guys can see, because I don't literally use imbalances, but I think that you guys are familiar with imbalances. So imbalances, they show us very, very strong zones. So we are able to see, or what I can do is, I can do this, very strong zones. So you see, so these imbalances that I put here, they will help you a lot. They will literally help you a lot. IBM. So let me reduce this IBM here. I have to reduce it to, no, it's too small, let's say 16 years, so that you can be able to identify what the thing is. It's an imbalance. Okay, so I can clone that imbalance. Right, I can clone it, clone, and I can use it on this imbalance too. So I'm just adding these things because I'm sure that some of you are familiar with smart money concept, the ICT. Some of you are familiar with those kind of strategies, but I don't literally use. I use institutional flow. So we work with institutional flow. We work with where the money is actually going. It's not about technical analysis. Technical analysis shows you where a lot of retailers are putting their stop losses, where a lot of retailers are putting their orders, so it helps you a lot. So I'm going to show you what institutions are doing, because it seems like you don't identify what's happening. So the moment you start to identify what's happening, you will start to see that things are not as they look like on the chart. So at least with technical analysis, it's good. So this, it's going to be the third intra week, intra week, yes, third intra week. So it's going to be 20, right? 20, and the color is going to be orange. Yes, good. So now I'm going to add. Now I'm going to add, what date was it? Is the 10th of March until the 16th of March. So 10th March to 16th March. Yes. Guys, the reason why I'm putting all these things here, they're very important. Knowing what happened during those dates, it's good. It's like you're journaling whatever you're doing. So you know that during the date of 3rd March to the 9th, institutions were buying, the market was bullish, the market was bearish, the market was actually consolidating. So you know that the market was consolidating for a couple of days, let's say 4 days, or maybe 4 days, or maybe let's say 5-6 days. So it's good. So you know that, like, when the market was consolidating from the time, if you like, you can also highlight, maybe put a box on that, just to show your, what do we call it? With technical analysis, we call it channel. Yes, it represents some form of channel where you know that when the market is fluctuating inside the box, it's a consolidation. You're only waiting for the price to break the box. So that's what you are literally taught when it comes to whatever you guys are actually trading with. But for me, not all imbalances are valid as they are. So at least here we know why the market retraced on the zone. We know why the market actually retraced on the zone, which is good. So it's an imbalance. It shows you institutions, that's how they grab liquidity. They use that to grab liquidity. That's how they come back to a specific zone. So they know that by leaving this selling, it's a form of an imbalance. It's a sign that institutions are manipulating retailers. So I can call an imbalance retail manipulation, because whenever the price is when the price is moving with a very high momentum, it's a bit suspicious, because usually retailers don't have such amount of money to push the price like that. So isn't that going to be a bit curious for you to see the market moving so volatile, like moving so high and with a very amount of speed, to be so very volatile without any form of reason? So you know that when the market is so aggressive, it's not aggressive because of it's aggressive. There's something that institutions are trying to do. So whenever you guys allocate such very high movement, you must expect a change of something. You must expect something to take place. The market cannot just be aggressive. We cannot see a long candlesticks like that for no reason. When the market is so bullish, aggressively bullish, or the market is aggressively bearish, there is something wrong that's literally happening on that scene. So it's very important that we literally have to take all this thing into consideration. So yeah, at least now you guys, I'm sure that you're familiar with imbalances. So the reason why I'm putting all these imbalances, also they might also help me, but I don't literally use them. But imbalances, they show me institution manipulation. They show me where institutions were manipulating retailers. So it's whenever these imbalances, the market is very volatile. Whenever you see some form of imbalance, you must understand that there's high volume. There's actually high volume. This is where we identify high volume, because they know why they're doing what they're doing. So I won't put any form of date on this fourth intro week. I wouldn't do anything like that. So now I'm just going to put orders. We're going to put orders on this intro weeks, so which is very important. So literally on Monday there was no order, honestly, because the market sold from the market was bearish. The market sold from the 22nd of Feb. That's when institutions placed their sell order. So what I can do is I can mark that sell order. I can mark that sell order like this and then lock it. So good. So when it's like that, so on Monday we had no order. Then Tuesday we had a buy order. So we had one buy order here. So we had one buy order. I think I should make it green so that we can be able to identify that it's a buy order. So we have one buy order and we also have one sell order. So we had another sell order here. So guys, I'm telling you, with this institutional strategy, you will make tons of money. Tons of money, I'm telling you. If you can just be consistent with what I'm actually showing you, you will be very profitable, because you're not actually second guessing or you're not assuming anything. It's actually facts right in front of your eyes. Like, these are facts. So sell orders, I'm gonna put them with red. Then we lock. So it's good. So we are able to identify how many buys and sells. So now we can see that the market was bearish from the previous intro week, and then on Tuesday we had a buy order. The market was bullish, and then we can actually see. So now I'm just marking buys and sells. Then I'm gonna explain to you why I say there's a buy and why I say there's a sell. So you will start to see the effect of all this. These things are very effective, and then they can show you, so we see that on Thursday there's another sell order. So it's very important for us to acknowledge these things. That's why I chose to use a bigger time frame, so that we can identify specific orders. Because if I use a smaller time frame, it's gonna be more complicated, because that's when we start to see the noise. We see a lot of orders going there. So at least when it's like this, it's orders in one thing. So we see that they sell orders here. So we can see that on Friday we had another buy order. But it's not just only one buy order. You will start to see why this is very effective. It's not just one buy order. You will see why the market moves the way it moves. It's not as easy as it looks like. It's a bit complicated. So we saw that. Then we actually found another sell order on Saturday. So institutions placed another sell order. They still wanted to drop the market. Do you see what they were doing? They were dropping the market to fill the gap to fill that gap of the money that they play. Remember, this is the money that they left to low retailers. That's what they use to lure retailers into the markets. That's how they lure you into the market. So if you can actually identify, if you can look at all these things properly, you will realize that it's easy. And what I like is now you know what happened. You know how many orders institutions placed throughout the first intro week, throughout the week of 24th Feb to March. You know everything about what institutions were doing from those specific weeks. So now you can note on your journal, on the 24th to the 2nd of March, the market was bullish. Why? Institutions placed 10 orders and 10 buy orders and 3 sell orders. So now you know why the market was bearish. So this means that institutions wouldn't place buy orders to what? To drop the markets. How can you open a restaurant to lose money? How can you open a business to lose money? It doesn't work like that. So whenever you open something, you want to make profits. You understand? You want to make more money. So the same thing as institutions. That's what they do. So now we can actually see that on Sunday they placed another buy order. The very same buy order came back to the very same imbalance. Can you see what's happening? The picture is revealing itself and you are able to see everything. So by looking at this, so what I'm going to do is I'm going to zoom this a little bit so that we can have a bit of clarity. So wait, okay, let me get back to that. Okay, it's good. Okay, so so in this case we can still zoom the market. Yes, I just wanted to zoom it a little bit, so like this, it's good. So yes, we are able to see all the orders clearly. That's what I wanted us to be able to identify. So let's not worry about all the imbalances and all that. The main aim is to see our orders. So if we can look at this clearly, let's see what happened on Monday. So the institutions placed a sell order on Monday. So it means that it's going to be 2 sell orders, I can say. So we can actually see a sell order here. So I'm going to mark that sell order here. Yes. Which is very important. It's necessary for us to acknowledge these things. So you see that's a sell order, but now you will see exactly what's happening. Let me just mark those orders quickly, then I'll explain further with you. I will explain further. Now let's just mark these orders so that we can be able to understand exactly what's happening in the market. So you can actually see that we had a sell order here. Yes, so yes, we had a sell order, then we're locking that sell order. So then we had another, I think it was a sell and a buy. I think we had a sell and a buy on this. Yes, it was not just a sell, it was a sell and a buy. Guys, if this institutional strategy is a bit confusing for you, I'm not saying use it, but you can learn from it. You can learn, because that's the only way for you to identify. It's not you using shortcuts. So you must not use shortcuts when you want to be profitable, especially in the market. You need to do full work. You don't have to. You're not supposed to do half jumps here. You need to do full jumps so that you can be accurate with what you're doing. When you're selling, you know why you're selling. You're not just selling because you see a bearish trend, or you're selling because there's something that showed you that the institutions are selling, or there's something valid about whatever you're doing. So here's another buy order here. So these things here are very important. Very, very important. And I'm telling you, um, they help. They help you a lot. A lot. Like they help a lot. So you can see a sell order here. Yes. So these things are very important. So when you're able to align everything with these things, so here we can see there's no order, and then here there's another sell order here. So here's another sell order. So on Saturday there was no order, so it was a consolidation. You're able to identify that order. So now we will understand exactly why the price moved the way it was moving. So we are able to see these things very clearly. So you don't need to, whatever happens on this week tells you a lot of what's going to happen in this week. It's not about any other thing. It's about you knowing. You understand? So you would know when institutions are planning to sell. This is institutional flow. You will know when institutions are planning to buy. It's easy. You will eventually know that. So here there was an order block. Look at this imbalance. Look at this imbalance. The market came and retested this zone and came down. Look at this imbalance here. The market went up, came on this imbalance zone. The market went bullish. The market broke this imbalance and came back on that imbalance zone and then went back down. So you can see that. So you can actually see how institutions defend their orders. So that's how they protect their orders. They place orders to manipulate you, take your money, and add on their orders to move the market in their intended direction, so that they can make 100% profit. So I was trying to show you. I'm not going to move the imbalance there, but I'm sure that it literally makes sense for you. So you are able to see why the market was moving the way it was moving. So I think it's more reasonable that way. So now we're going to look at this intra week. So we see that the institutions here, they were bearish. So the reason why the market will fall, you will understand later on when I explain to you why the market did what it's supposed to do. You will understand exactly what was I doing here. So on the first day of the third intra week, we had a sell order. So institutions chose to sell the markets and also buy the markets on the very same day. So no, the market was bullish, or they bought on Tuesday. Yes. On Tuesday they placed a buy order for their own intended reasons. We don't know why they did that. So the market was bullish, and then they sold they placed the buy and a sell. So we see that the market, they placed a sell order. So the market was bearish and lock. Yes. So we see that the market was bearish and bullish, bearish, and then they placed another buy order here. Okay. And you see a buy order. Yes. But honestly speaking, I don't think there was any order here. Yes. The order was placed on. There was no order here. I think there was. Yeah, eventually there was an order here. I think it's a buy order and a sell. Yeah, it's a buy and a sell. What am I doing? It's a buy, and a sell. So yes. So now you will see exactly why the market does what it does for a specific reason. So we actually found another buy order here. Another buy order. Institutions are smart. So if you trade against institutions, you're putting yourself at a very huge risk. So it's very important for you not to trade against who created the market. So you can actually see the market now became bullish, and then there was no orders, so they placed an order on Sunday, a sell order on Sunday. That's when we see a sell order on Monday. Yes, and then yes, the market was a bit bearish, and then on the very same day, the market was bullish. They placed a buy and a sell on the very same contract, which was the Sunday contract. Now we are able to see that. That's very good. And then Monday and Tuesday there was no form of. On Monday the fourth intra week, since we're not going to conclude that intra week, we can actually see. We need to identify imbalances here. So we need to identify imbalances. Imbalances are very important. So we need to identify imbalances. So we can see there's one imbalance here, and also there's another imbalance here. So we need to be very careful. So we need to check exactly these imbalances, because they tell us a lot about institutional flow. So we are able to see a lot of institutional manipulation when we are doing all these things. So now you can actually see that yes, so sell order, and then another buy order here. We had a buy order. So by checking all these things, now you will see why the market is moving the way it's moving. Okay. Maybe my way of showing you orders might be a little bit slow. I thought that I have to do that because I need to show you, because I don't literally have to like put all these lines. I'm showing you this line so that you can be able to identify those orders. You can see when I'm talking about an order, you can be able to see what am I talking about. You see the market became bullish, and then the market sold. It sold on Thursday, the 20th. So you can actually see, and I'll tell you why the market sold. And I'm sure some of you are able to see why the market was bearish there. It's a very good entry for you to take advantage of. So now we are going to the first intra week. So we see that on the last 2 days of the previous intra week, before the first intra week, we see that we had a sell order. So the market was bearish, and then the sell continued on the first intra week. The market was falling. So hence I said, whenever the market is dropping like this, when the market is going down like this, you must understand that institutions wouldn't just allow the market to fall like that. So when the market is falling like this, you must understand that this is a form of manipulation. It's a form of manipulation. It's how they lure retailers into the markets. That's how they make money. Whenever the market is dropping, they know that you will fear a lot. So they thought that it's best for them to do this. So now you see, when the market reached down, it sold for the whole entire the 24th contract. So we reached the Tuesday, which is the 25th contract. That's when they placed the buy order. What are they doing? They are placing orders. Like they take a huge amount of money, and then they split it into pieces. Look at what they did on Tuesday. They placed a buy order and a sell order. So when they take the market up, they collect some form of liquidity. At the very same time, some retailers is just a retracement there. Then what they do is they trap these buyers here. The buyers on this area, they are trapping them to take their money so that they can drop the price even further, so that they can place their orders to take profits. So why I'm saying opportunity was presenting itself. We had a pending order here. It's a buy, it's an active pending order. And we also have an active pending order and an active sell order. So based on this sell here, plus this sell order, it gave the sellers power to push the price further. So the market was falling. Why did the institutions allow the price to go down? They allowed the price to fall so that they can take out this retailers here. Remember, this is stop losses here. So they made sure that the price comes to this area so that they take out less liquidity. And then I don't know how, because since we have ICT, we have smart money concept, we have price action, technically there's different types of trading here. So this that I'm trying to show you here, it's very, very vital, because this pending order here, in my sense, it was an opportunity, but to me, it was not an opportunity because sellers were more than buyers. So it means institutions wouldn't place one buy order and two sell orders. They wouldn't place a buy and a sell to push the market up. It's impossible when the market was bearish, when the market was coming from a selling phase, and then they place another sell, a buy and a sell. So you can see that it's a form of manipulation. So we have one sell, one buy. So it's one against one. So the market was falling. Then this sell order, this buy order was activated. So it means that we have three buy orders here. We have three buy orders against one sell order. And you see, so the market was bullish. But for me, it was not enough. It was not enough. So the market became bullish. The market became bullish. Okay. So the market became bullish. It became bullish. And then the institutions placed another sell order. Can you see what's happening? They placed another sell order. So this must show you something is wrong. It shows you that the market is still falling even though institutions are placing buy orders. So you can see that sellers are becoming more than buyers, right? They are becoming more equivalent than buyers. So they make you see what they're doing? As the market is dropping, they buy. As the market is dropping, they buy again. As the market is dropping, remember, all these buy orders are accumulating. This buy comes to this buy comes to this buy, and then so on and so on and so on. So now you can see that now the market came. So it's gonna be 2, 4, 6. Now we have 6 buy orders now. So we have 6 buy orders, and the buy orders were taking effect on the 28th of February. So now we have 6 buy orders and how many? And 2 sell orders. Remember that all the sell orders were not yet activated, right? So the market became bullish. This was the best opportunity for you to enter. This was the best opportunity for us to buy. This area was an area of buy. So if you were trading this, it was a good entry for you to take, because we also had what happened? We also had an imbalance. There was an imbalance here. So an imbalance, it shows that this was a point of interest. This is a very powerful demand zone. So the institutions, it's a point of interest. So we can see that from this zone, it's an order block. It's actually a hidden order block where institutions were actually making sure that the price, they created an imbalance so that they can drop the price to take liquidity from those who were buying here, to take back their money from those who were in this trade here, right? So they placed a sell order to drop the market a little bit. Remember that the market can't just drop like that, because the orders that were placed on this order, it's very, very powerful. So the market came back to the zone, and then immediately when the market came to that imbalance, we saw another buy order taking place. So this was a second signal. This was our second signal for us to go long. You understand? It was our second signal for us to go long. You understand? So the market became bullish. So what happened? The market became bullish. So now we need to calculate how many sell orders. We have one, so we had how much? 1, 2, 2, 4, 5. So we have 5, actually 6. Then how many buy orders? 2, 4, 6, 8. So 10. I think we had 10 buy orders. And we had how much? 6. We had 6 sell orders and 10 buy orders. So the market was bullish. And what happened? We had another pending sell order. So we had 8 sell orders, right? And then we also had another. So it's gonna be 8. You see, it's gonna be 8, 10, 11. So we have 11. We had 11 sell orders. 11 sell orders. So what we're gonna do is, now we have 11 sell orders. 11 sells, 10 buys. So for that weekly contract, for the first intra week, we had 11 sell orders and we had 10 buy orders. Do you see? So what does that say? It tells you that institutions expect the market to fall for the next intra week. So we expect the market to drop for the next intra week. We expect the market to fall, right? So this is not complicated, guys. This is easy. So the fact that we had liquidity here, and then the liquidity was been taken out, so it was another entry for us to take into consideration. So we had another entry here, which presented itself on Monday. So here was our another entry. So we could take profits here. It's either you can take your profit here, or you can take your profit on the first lower low, right? So we see our first lower low. So we would take our profits here, for example. Yes, that's where you can actually take your profits. And then another thing for us to identify that institutions, they want to sell further. You can actually see that they created an invisible order block. So an imbalance, it's a refill. They created an imbalance so that the market can come back to the zone and continue in that intended that. So now we can see that we had 2 sell orders on the Monday, then we had 1 buy order. So it's actually 1 against 1. Then the market came back to that imbalance. Then we saw that on is it Wednesday? On Wednesday we had another buy order, so the market became more bullish, and then we had a buy and a sell. So we had 2 buy orders and 2 sell orders, right? So the market continued going up. So it means that the sell orders were more dominant than buys. So institutions placed a sell order. They placed a sell order. So what happened? Because we had 2 sell orders and 2 buy orders. So they placed the sell order. What happened? The market dropped. And what happened? And when the market was dropping, it activated this active pending buy order. So it made the buy orders to be 1, 2, 3, 4. So we had 4 buy orders and 4 sell orders, but the market became bullish. Institutions, I don't know, it was actually 4 buy orders and 3 sell orders. But during the process of the buy momentum, institutions placed another sell order. Why? They were actually trying to protect their orders on this imbalance. They were trying to protect their orders on that imbalance. So if you can check the imbalance, they were protecting their orders here. You can see that the market never broke that imbalance. It was fluctuating on that imbalance zone. So it's more reasonable for you to check all these things, okay? So now you can see that the market became bearish. It even activated this order. So we had how many sell orders? So it was 1, 2, 3, 4, 5. We have 5. We had 5 sell orders, and how many buy orders? One. Okay, 1, 2, 3, 4. Yes, we have 4. We had 4 buy orders and 5 sell orders. So the market obviously had to fall. Then the institutions placed another sell order on the last day of that intro week. So now we saw that the market was bearish. The market was bearish. And then the market was bearish. It sold, even though it activated this pending order from the previous week. It activated this pending order from the previous week. Yes, hence I was actually sorry about that. I was just taking a little bit of break. Yeah, I didn't actually want to make this video that long, so I just literally wanted to show you exactly what was literally happening here. So I'm happy that you managed to see the entry. So I need to circle entries for you so that you can be able to identify exactly where the entries are. So this is a potable zone. Wait, please. Okay, let me check something. Yeah, sorry guys. We're having a little bit of technical issues here. So now I just wanted to show you. Okay, this area, it's a point of buying interest. This area is a point of selling interest. And if you can look at exactly where the orders are taking place, they always take place. It's either on a lower low or on a higher high. That's where opportunities present themselves, because it's always institutional liquidity grab. You can also see those buys and sells. They take place on those pivot areas, which is very important. But I don't want you just to buy because the market is on discount or the market is on premium. I don't want you to just buy. You need to buy with facts. Because if you're saying the market is on discount, look at what happened on the 10th to the 16th of March. The market even sold below that pending buy order. It even went down before it came back up. So do you see that you were just going to buy there and then you were going to lose some certain amount of capital, so which is very bad, you see. Yeah, so at least you guys can see. Yeah, so on this third intro week, I won't discuss too much. You can actually see on the price of 136 US dollars DT, you can actually see that institutions, they came and activated this pending order, and then the market became bearish. So this was an opportunity for you to sell Solana. You could have made tons of profits. Remember, this is a 4-hour time frame, guys, so you'd have made something here. So unfortunately I have network issues, so I can't show you or place the our selling mark. Seems like it's not going to present itself here, because I don't know for what reasons. It's network issues here. So yeah, at least I'm happy that we managed to cover some stuff together. We're gonna have a lot of content together. So this time around, I usually explain a lot about crypto rather than to be practical. I'm always theoretical. So I think that you guys need a little bit of closure. So I thought that I should take time and just make proper videos for you, so you can actually see what I'm actually talking about when I talk about all the contents, and you can actually see that it's easy. So you don't have to buy. Just imagine for you to buy from the beginning of the week, you were supposed to buy on the 28th of February, which was Friday. On the second week, you were supposed to sell on Monday, from Friday, Monday. So you had the, so you don't just buy things, or you don't just sell. You wait for proper setups to present themselves. Do you understand? So you can place buy, sell limits. It's good. You can place buy or sell limits because you know that it's a point of interest, and also here it's a point of interest. So you don't just buy, and you can also take your fundamentals and link all your pivot points and see if they correspond with your technical analysis. But for me, price action, the order says everything. I mean, like the orders that are placed in the market, this is money. The money that's placed in the market says everything. I understand that we have technical analysis, we have fundamentals, whatever strategies that we have to identify. The main aim is institutional flow. What are institutions planning to do? We need to identify what they're doing in order for us to be profitable. So we cannot go against big money. Big money will always be against us. So we need to identify where the big money is going so that we can also make money. Okay. So today, I think that's all we're going to cover for today. And for more, for maybe Bitcoin, Ethereum, Alphax, and we'll get deeper into those ones and we will discuss. And I know that on your comments, I think it will be very good for you to, inform me or on what analysis you would like me to do for you, specifically on any currency pair. If it's Chainlink, if you're on a decentralized, the Uniswaps or the Chainlinks, the Dodgies, whatever you prefer me to, because crypto is actually good, guys. And if there's some of you who are also doing forex out there, if you would literally want me to also dive into that, I can sacrifice, I can compromise for you to, to analyze things for you, so that since it's just the same thing, it's market. As we have crypto, we have forex, we have futures, so it's everything is in the market. So we can make analysis for anything, okay, as long as it's based on the crypto space, it's based on finance, then everything it's reasonable, because we need to understand money flow. So yes, guys, I hope that you have a wonderful day. Thank you for your support, and please have a lovely day.